Hello, guys, and welcome to your market report for Wednesday, the 25th of July, 2018. And big welcome to the show. Now, let's get it started. Let's open the charts. Where's my chart? Okay, hold on just one second. Okay, let's open the charts right here. Now, the first thing we're going to take a look at is cryptocurrency, Bitcoin specifically. And we're at Bitstamp right now. No, we're at Bitcoin Wisdom right now, and we're looking at Bitstamp. 82.22. Now, if we go to the short-term chart right here, it looks like we're in a bull market. And a lot of people think we're back in the bull market of Bitcoin right now. This is what they think. But if we put this in perspective by looking at the 12-hour chart, we can see ever since the 20,000 mark, when we were in a bull market, this lead up right here was a tremendous bull market. What we've seen is we've seen lower highs. We've seen two lower highs so far, and we've seen two lower lows. The first lower high struck in at around just under $12,000, and the second lower high struck in just under $10,000. And what it looks like to me, the biggest possibility of what we're seeing right now is a third lower high. And if it is a third lower high, it probably wouldn't get over $9,000 or let's say 95, 92, 9,300 before we're going to see it roll back over again as a lower high, as a third lower high, and then make the third or fourth low, bottom in price, which would present another buying opportunity coming up. Now, this is what it looks like to me, tentatively so far. This is what it looks like. It looks like it's presenting itself in another week, or maybe 2 weeks from now, another buying opportunity. This is what it looks like. If it is this next buying opportunity, I'll let you guys know if I go out and I buy coins. Now, today, I've checked the prices on the cryptocurrency market capitalizations. Let's just take a look here for a minute. A quick look. I've taken a look at these coins in here today. And first off, we have a market cap of $298 billion. Bitcoin dominance is very high at 47.2%. Now, I've looked through these coins, and I've seen that Litecoin has actually moved down in price. It's moved down in price 1.55%. Bitcoin Cash is also down today. I'm going to go in and try to buy myself one Litecoin today. I mean, it's not an awful lot of money, and I see it as being undervalued in this market right now at this point at 86 bucks. A little bit undervalued in this market. And so I told you when I'm going to go and I'm going to buy a bit of cryptocurrency. I'll tell you when I'm buying. Now, this is by no means financial advice. It just means that I'm just letting you know when I'm going to buy myself a little bit. I'm going to buy myself a little bit of Litecoin today. Now, let's take a look at the silver price. Silver today is shooting upwards in price. We're up 15 cents on the day. I hope you guys got a little bit of physical silver when we were down around $15.25 or so, or 15.35 cents on the spot price. I hope you got yourself a few, maybe a dozen coins or something, a dozen rounds or something like that, or maybe more. I mean, if you got the money, I mean, you know, but I hope you got yourself a little bit, and now she's on the upswing again, and who knows if it'll touch those lows again. 15.15, I think, was the low, and I don't know. You might not see that again. You might not see that go that low again, or maybe you will. But I hope you got a little bit, because that was one heck of a good price, you know. Now let's take a look at the Dow Jones Industrial Average today. She was up 197 points yesterday on the day. It hasn't quite started yet. The market's 10 more minutes before it's going to open up. But the volumes are extremely low. We got a rising market. Today we're probably going to have about a 100-point drop in the market, and this market is just so ho-hum right now. It's actually boring right now, and it's going to be boring until the bond market starts to turn over. So for you guys out there who believe there's going to be a big crash Friday and all the financial markets of the world are going to come down, ain't going to happen. Ain't going to happen this Friday. It's not going to happen until the bond market starts to move, and the bond market right now is constipated. Right now, the bond market is constipated. It's like a man that's constipated. And until he moves, until that bond market moves, we're not going to get any wild reactions or knee-jerk reactions in the stock market either. Until that bond market starts to move. You got to watch that bond market. So now let's take a look at that bond market. What we got today is boring. It's down ever so slightly. Yields are down ever so slightly today. And they were like up yesterday a little bit, but I mean, I think the movement upwards, the trend upwards is starting to begin. It's just in the infancy of this market getting ready to start to move. But I don't believe that it's going to move anything significantly by Friday. So I know there's these people out there who believe that the markets are all going to crash on Friday. I don't think that's going to happen. I think we're going to see Friday come and go. But that doesn't mean we're out of the woods, because I think within the next few months, coming up, probably before the end of the year or early in next year, we're going to go through hell. Because this bond market is going to start to move at a certain point, and we're going to go purely through hell. So, I mean, this is going to be something that a lot of people are like, yoo-hoo, woo-hoo, it's coming. Don't be woo-hoo, it's coming, because this thing's not going to be pretty when it hits. Now, the U.S. dollar index, 94.39, and it's fairly boring too. It hasn't moved much. It's been in the 94 range for quite a little while now. Let's take a look at Deutsche Bank. Deutsche Bank's starting to drop again a little bit. It's down 1.36% on the day. Deutsche Bank is. And if we take a look at, this is the 1-year chart. We take a look. She went down to these bottoms of like 906 euros. Was the bottom 9 euro dollars? Well, they're not dollars, but 9 euros. And now she's made her way back up, but she started to level off. She started to drop again. She's 10.33. These people that bought in right in here, their mindset was that the government's going to bail out Deutsche Bank and that they're going to make profits off of the bailouts. That's their mindset. And they're taking a chance. They're taking a big chance that Deutsche Bank's not going to completely fail, and they're not going to completely lose all the money that they invest in buying into Deutsche Bank stock. I wouldn't touch it with a 10-foot pole, because I think the Deutsche Bank, I don't think nobody's going to save Deutsche Bank. I really don't. I know they're so certain that Deutsche Bank's going to be saved, but the world's financial system right now is in such a mess. There's so many leaks coming out. It's almost like a dam, and you got a bunch of kids putting their fingers in the dam. This is what the government's like. Every time they see a new leak spring up, they put their finger in the hole and stop the leak, but the leaks are springing up everywhere. Everything's starting to come apart at the seams. Let's take a look here at what's going on in Japan. The Bank of Japan, it says, has lost control over the JGB yield curve. The Japanese government bonds, JGB yield curve. They've lost control over the yield curve. And they've also been forced into a stealth taper. They're tapering, but they're not letting anybody know that they're tapering. They're purchasing, it says their bond purchases by liquidity conditions and their own dominance of the once mighty JGB market. They're doing a stealth taper. It says the IMF confirmed the nightmare scenario for central banks was now in play. We cited Takajuto Okubo, chief economist at Japan's macro advisors in Tokyo, who said that the scale of its current debt monetization, the Bank of Japan could end up owning half of the JGB market by as early as 2018. He added that the Bank of Japan is basically declaring that Japan will need to fix its long-term problems by 2018 or risk becoming a failed nation. The Bank of Japan will not boost quantitative easing. If anything, it will have no choice but to start tapering it down, just like the Fed did. But they can't do this. Ultimately, can't do this. It says such a change in the market conditions could trigger the potential for abrupt jumps in yield. It says what will happen then? It says once foreign investors lose faith in Abenomics, well, I've already lost faith in Abenomics, but once foreign investors lose faith in Abenomics, foreign outflows are likely to trigger a Japanese equities meltdown similar to the one observed in 2007 and 2009. And from there, the contagion will spread to the entire world, whose central banks, incidentally, will be faced with precisely the same question: who will be responsible for the next round of monetization and desperately kicking the can one more time? They've said an understatement here. A lot of people are going to read through that last part right there, but this is the whole thing, is this word right here, desperately kicking the can. This next attempt at monetization, right here, monetization, and desperately kicking the can one more time, is what's going to set the hyperinflation into place. Because the next round of monetization, this next round of monetization is going to be in desperation. And what it's going to do is it's going to be so big, it's going to have to be so big, so much larger than the other ones, that this time it's not just going to stimulate the economy into a it's not just going to stimulate the economy into a recovery. It's going to actually stimulate the economy into a real recovery. And it's from that real recovery that consumer prices are going to rise like crazy. Prices on everything are going to rise like crazy. And we're going to see price inflation across the board, massive price inflation. This is when your gold and your silver is going to take off. They're going to lose control over it. Finally, the banks are going to lose control over it. But not only are they going to lose control over it, you're going to find that these big banks, like JP Morgan Bank, who have been accumulating, they know this is coming. And what they're going to do is, JP Morgan Bank is going to switch gears from being a suppressor of the price of silver to a pumper. And then they're going to dump. They're going to dump their physical silver when the price is right. What in the heck was that? I hate these pop-up ads. Okay, we're going to get off of here. We're going to end the charts. And we're going to get off of that particular site. Now, here's the thing, because they got pop-up ads. I hate pop-up ads. They scare me. They come on my earphones. It's just like blasting noise. That's all it is. Anyway, when JP Morgan Bank hits a certain point where they can't suppress the price of silver anymore, and the price of silver is popping, and the general economy, we've got tremendous inflation, they're going to lose the price of all these commodities. All these commodities are going to go beyond bizarre in the price they're going to go up to. We're going to lose control over the price of anything. All this price controlling that they're doing. They're going to then pump the silver as hard as they suppressed it down on one end. They're going to pump it because they know this is coming, and they are preparing for it. They're preparing to make at least 10 times their money invested in silver. They've cost averaged. Now, you guys out there who have been cost averaging in silver and buying on the way down, buying the dips, right? And you're holding that silver, do not let go of that silver. Because if you let go of that silver right now, what you're doing is you're taking the loss. You're accepting the loss. JP Morgan is not letting go of his physical silver right now. And the reason why, he wants to make a 10 bagger, which is 10 times the amount of money that he invested. You can make the exact same thing. You just got to be patient. Be patient. It's coming. JP Morgan is patient. How do you think they got rich, these fat cats? They're patient. Anyway, listen, thank you guys for listening to the show, and we'll catch you in the next episode. Bye-bye for now, guys.